stocks likely to make these big moves pretty quickly. So how do we take a scalpel to that stock chart? How do we dive in and identify that perfect buying opportunity where the stock should make a big move? We're going to go through that. I'm going to show you how to know where to focus your efforts, right? There's 6,000 plus stocks, there's 11 sectors, there's 70 plus industry groups. How the heck do you know where to look? Well, we're going to go through that as well. How do we fish from a stock pond and dive in to those stocks in the leading groups with the most strength? And then I want to walk through some individual names today. I'm going to show you the leading groups, some stocks. I've done a little bit of research here this morning, ran through a few names I'm going to share with you and kind of go through a couple that are looking good right now. So welcome to all of you. Hope you guys had a wonderful weekend. If you're wondering how my weekend was, I have a 3-year-old and a 7-year-old, so I don't really get weekends anymore. I get 16-hour parenting sessions, but nonetheless, good time. Happy you're all with us today. So this is the S&P 500 index, so specifically the futures. This is today's session. So the futures opened last night at 5 o'clock p.m. Central. Around where they closed, they have gone up overnight, largely on news of a U.S.-Iran meeting tomorrow between Trump and whoever the heck is running things over there right now. So we continue to be in this kind of ping-pong market where we go, we have a ceasefire. No, we don't. The Strait's open. No, it's not. Oh, we're going to hug and sing Kumbaya. No, we're going to bomb the crap out of each other. So it's a little bit tough right now, right? If you're watching this, I know they're going to grow. I know. Listen, I said that about the kid thing. Listen, they're great. I love them, but it's tough. It's exhausting. So anyway, it's a little bit tough right now, and it's not always this hard. It's not always that we're hanging on a tweet from the president to decide if the market's going to go up 2% today or down 3%, right? It's very, very difficult, but there are things we can look for. So I want to walk you through really quickly our go-to breakout pattern. And I know a lot of you have seen this a million times, like, Ross, we get it, move on. But for everyone joining us for the first time, this is going to be the most eye-opening thing I can show you today. It's a pattern that'll identify when stocks could potentially be making a big move higher and how to buy pretty precisely. So this is SanDisk, which if any of you bought it last year, you're probably on your yacht right now, retired. It's been an absolute monster of a stock. Went public here at around 40, 50 bucks. This was a $30 stock 16 months ago. It is now a $2,000 stock. I mean, I kill myself for missing this historic run. But how do we know when to buy them? Well, there is a go-to pattern, what I call a shallowing breakout pattern. Others, like Mark Minervini, one of the greatest who ever did it, calls it a volatility compression pattern. Some will call it a wedge. There's lots of names to it, but the principle is the same. Okay, so this is what we're looking at. And I'm going to take the moving averages off because they don't really matter for what I'm sharing with you right now, but this is that pattern I want to see. I want to see a stock showing tremendous strength, whether that's up 30% or 50 or 300 or 500 like this one. I want to see the stock is in demand because at the end of the day, the stock market is an auction. It is buyers and sellers trying to agree on price, and it functions on the basics of principles of supply and demand. Don't overcomplicate this stuff. It's no different than the market for houses or Pokemon cards, okay? If more people want to buy them than sell them, the price is going to go up and vice versa. That's simple. Don't overcomplicate it, all right? So how do we know if demand is higher than supply? Well, the thing's going up, right? And so that's step number one. We want to see the things being bought by big institutions, by retail investors, by big, traders stepping into the stock. But when the thing's just gone from 100 to 200 to 250, like the higher it is near term, the more risk you are, more at risk you are for pullback. Because stocks generally don't do this. Generally, they kind of do this, right? They stair-step their way up. So how do we identify those buy points? Well, what I want to see is this pattern playing out that looks something like this here. And what I'm drawing on the chart is a visual representation of the supply, sellers, being sucked out of the market. Now, why is that important? Well, remember, supply and demand. Okay. We know there's more demand and supply in the stock, but how do we go in with a scalpel? How do we find that precise moment where the stock has a really good chance of exploding higher? And what we want to do is find the place where supply has shrank, right? Where there's not much stock for sale. Because we have to remember, there's not an infinite number of shares. Let's just make up a number and say there's 1 million shares of SanDisk. There's more. Let's pretend it's 1 million. Okay. 600,000 of those are not being traded. They're in your 401k account. They're in an ETF or a mutual fund. They're being held by executives or insiders. They're not out there for sale. You own stocks that are not for sale right now, right? So we're only chasing the float. That's what they call the number of shares out there being actively traded. And so, again, let's say there's 1 million total shares of SanDisk, maybe the float, or just, again, I'm totally making these numbers up. Let's just pretend it's 400,000 shares are being traded around, okay? Well, after this thing's made a big run, it goes into a pullback. People want to take profits. They've doubled, tripled, quadrupled their money. That means supply, sellers are coming in, overwhelming the buyers. It pushes back. Now, if the stock is still in demand, if the big institutions and the buyers are still getting in, they're going to take advantage. They're going to drive that stock back up. It then pulls back a second time, whether it's a double top or people are scared, whatever it may be, again, driving it back up. Even shallower pullback the third time, then drive it back up. And what's happening here is that the strong hands are sucking up stock. Okay. So imagine you're one of Warren Buffett's traders. Imagine you're, they're working for that moron Cathie Wood or some big mutual fund or something. Like you're trying to build a position in SanDisk, not 10 or 20 shares, 30 or 40 million shares you're trying to build up, right? This thing, you can't buy 30 million shares of SanDisk in a day unless you want to drive the price to the moon. So you got to buy it up methodically over multiple days, multiple weeks. And so if your job is to build up 50 million shares of SanDisk, then every time it falls 10, 15%, you're going to buy more. And you're going to buy more on the dips. And so if you notice, these drops, these pullbacks are getting shallower and shallower, right? So this one right here, it pulled down about 37%. This next one over in here, it pulled back about 20%. This last one over here, it only pulled back about 10%. So we're going from 37 to 20 to 10. Why are they shrinking? Why are the dips becoming smaller? Because there's fewer and fewer people selling each time. There's less and less and less supply. And those big funds, institutions, are gobbling it up and gobbling it up and gobbling it up until there are no more $230, $250 shares of SanDisk. Everybody that was willing to sell it has sold. Everybody they could shake out or scare out or bore out of the position is gone. And so now, once it comes up here, once it crosses $270, $280 a share, now they're through that supply. Because what's happening here is during this little wave over here, they sucked up maybe 100,000 shares. So now it's down. Whoops, sorry, these shouldn't be dollar signs. There's 1 million shares. Then there was 400. Now you're maybe down to 300,000 shares. This next little, they've sucked up some more. Now you're maybe down to 200,000 shares. Now you're down to maybe 50,000 shares. I know my handwriting is garbage. I'm trying to do it with a mouse. But that's what's happening is there's fewer and fewer and fewer shares. They're gobbling them all up until eventually they've sucked up whatever they can between 2 and 250 or 260. And so now if you want more, you got to pay up. Nobody else will sell it at 260, 275. Would you take 280? Would you take 290? Would you take 300 or 350? That's what causes the stocks to make big runs very quickly like this. Okay? It's not that suddenly everybody wanted to buy it here. The demand was already there. We saw it over here. The stock is in demand. This is the consolidation period. This is when they've sucked up the supply of the stock. And so by waiting to buy here, once it emerges from this, that's when that demand is facing a tiny pool of supply. Same number of buyers, but far fewer shares for sale. And I'll give you a quick analogy. Let's say there's a neighborhood with 100 houses. You're some evil corporation like Blackstone. You're like, I want to own them all. I want to own all 100 houses for whatever reason. Well, the first 5 are pretty easy to buy. They're sitting there on the market. You negotiate, you pay a price. The next 10 you can probably get if you just come offer fair value. The next few maybe offer 5-10% over market, they'll sell, and etc. Until you get down to the last 4 or 5 houses. These people have no plans of selling. They plan to die here. They got all the money they need. You got to pay up and pay up and pay up. So that's what's tough. You got all these buyers chasing a very small number of shares. Does this make sense? Questions about this breakout pattern? And this is not the only way to skin the cat. It's not the only way to make money in stocks. But when you have a strong bull market where everything is rising, money's going in, and you're just looking, how do I buy stocks that can explode higher? This is one of the best ways to do so. And it's a way to put the odds in your favor. Now, one other thing I'll tell you about this before we move on is this is also going to let you reduce your risk. Because after each of these dips, so it pulls down to here at 181, shouldn't go back below there. This dip pulls back to call it 200, shouldn't go back below there. This dip goes to 230, shouldn't go below there. And so each time when it breaks out, that last swing low, that last place it fell to and then started rising, that's going to be our stop loss. And if you're brand new, a stop loss is simply a sell stop order. So you buy it here, right? And when you put in that buy order, and I'll show you this today at 270, you put a sell stop at 230. Really like here. And so your risk, your total risk on this is that 12.9% range between when it breaks out and where your sell stop is. And so not only are you getting leading stocks with big demand, not only are you buying at a point where it has a good chance of running pretty quickly, but you can do all this without risking 30 and 40 and 50%. A 13% risk in a leading stock and a leading group that's about to run 170% in 32 days is a hell of a trade. If you risk 13 to make 170, you only have to be right 1 in every 14 times. If you're right a quarter of the time, you're going to make an absolute fortune. So this is what it's all about, is that risk to reward. I don't care if you're risking 4% to make 12, or you're risking 10 to make 40, or you're risking 50 to make 500. That's how you get the odds in your favor. Now, by the way, for those joining us for the first time, if you are not already a member, go to that link in the description now, or go to tradewithross.com. You can even scan that QR code over there in the corner, but you need to make sure you're signed up for our Black Ops service. It is just $5 for the entire year. I'll say that again. It's $5, and that covers the whole year. We do this session every Monday live. Right now, they're on YouTube, but we may be forced to move them back to Zoom like we used to do them. If that happens, they won't be available for the public to view. We have another Thursday session with our analyst that is on Zoom for members only. I will give you our industry strength indicator for TradingView that shows you where the strength is in the market, which groups are rising the fastest. You'll get my weekly newsletter delivered to your inbox every Friday afternoon, several bonus reports, access to my support team, tons of stuff, just $5. So make sure you are signed up for that. Again, the link is just tradewithross.com. Go to that page. It's kind of corny, but it's all laid out here. And just, again, it's $5 for the year. There's no strings. So name, email, credit card, get signed up. You get all the tools. If it's not the best $5 you spend this year, tell me, send me your address. I'll put $5 in an envelope and send it to you. I promise. Okay. Yes. And there is a lifetime upgrade as well, Mitchell. All right. So hopefully this makes sense to everybody. And if we go back and look at SanDisk, notice how many buying opportunities there were. You saw this a couple of times. So even off the IPO, you see a very similar pattern down here off those lows. That same pattern of shallowing, consolidation, tightening up right here off those lows before that big breakout. It then makes a big run, puts in the pattern again. Nice. That's the one we just looked at. It then makes a big run and was setting up to do it again. So it was tightening. What happened in here? Oh, we went to war, shot down, quickly comes back, breaks out again for another run higher. So this is a way to kind of put the odds in your favor and to identify these really clean buy points, right? $5 per year, no extra. Seriously, no extra. There's no nothing. I don't even think it automatically renews. I mean, so, and I promise you, I'm not getting rich $5 at a time, okay? But there's all this science out there that proves if you give anything for free, people value it far less if they pay for it. Even if it's just $5, you're going to take this more seriously. Ross, this example is worthless. You're taking an example of a stock that has gone up tremendously. Very few stocks have done this. Chances of somebody doing this are very low. Totally true, George, in terms of the total return. But give me another stock, George. Give me another stock that is up somewhat, 30, 40% this year, whatever. I mean, obviously, look, I can show you one setting up in it now, but it doesn't prove anything. Like, we have to see the pattern that this has historically worked. You are 100% right. SanDisk is an absolute monster. The odds you're going to get a $50 stock that goes to $2,000 next year are extremely low. Yes, I'm just using it as an example. Moderna. Okay, somebody said Moderna. Okay, I don't know about one. It's up big this year. Well, I guess it is from the January lows. If we look at Moderna, but let's go back to when it was running. Okay, let's go back to, and again, I'm not trying to cherry pick. Like, these are the stocks we want, stocks that are in uptrends currently, and so we have to look at stocks in previous uptrends. And so when we go back here and look at Moderna, it may not be, but you're going to see very similar signs of this. Notice back in here where it went from 20 to 80. It comes in, it shallows, it tightens, it breaks out, and then ran from 80 to 170. That's a double. What did it do next? Again, shallowing, consolidation, breaks out here, runs from 180 to 480. Okay. Now, you want to look at this year. Fine. And again, I'm not, this is not all stocks are in uptrends. Let's take a look at Moderna here. So this one is probably not as picture perfect clean, but I think you see kind of the same idea, right? Off the lows from 20 to 50. That's a, 150% move. It then comes in. Now, look, it started to get loose. Okay. I would not have taken this one. And I think a lot of this had to do with the war and how things have gotten a little choppy, right? We have to take the whole globe or the whole picture into context. But we are seeing it kind of break out here through this clear resistance and push higher. Somebody said AMD, Bitfarms. Yeah, AMD's up. This one probably wasn't as clean. I mean, it spent so long going nowhere, right? So really, it's starting to look better right now, AMD is. So we're starting to see signs of that now. So the big run here we got in April and May, it's then kind of coming in. See how it's consolidating and tightening and getting ready. So this would probably be a buy above 550, 560. Let me take it at a log scale. Going to even that out. Somebody said FCX. Yeah, can you see the pattern in FCX? Again, this one's a little longer, but that's okay. And look, if you're, I showed you the same, like I'm trying to show you on really textbook exam. I'm not trying to cherry pick. I'm trying to show you what a perfect one looks like. Because if you know what a perfect one looks like, you can kind of see these when they're not perfect. And this is the stock market. Nothing is going to be perfect, but same idea. Big, massive strength from 40 to 70 coming in. Notice it just kind of shallowing out, pulling in, still kind of loosening up here. If it firms up and breaks, that's going to be a pretty good buy. It's just, this is a big copper miner. Copper obviously tied to the infrastructure and the AI data center build out. That is very much dependent on $80 billion dollars a year in CapEx being spent by each of the hyperscalers. Their success dependent on the overall economy and rates, and that's tied, of course, to what's happening with Iran. So there's lots of little pieces in here. Somebody said Vera. Yeah, Vera doing well. I bought this. I bought this one after I put that video out on Vera. I could have bought it down in here on the break of this little downtrend. I didn't want to front run our members on this one, so I got in a little bit late. It's doing well. Now, is it a perfect breakout pattern? No, like I said, it's not the only way to buy a stock. This one's got a pretty good story on it. But if you look over in here, you can see very similar signs of that. Again, not perfect, but look, from 20 to 30, it then comes in and starts to shallow. It even put a little high handle right up here at the top, breaks out around 32, 33, and then quickly runs to 55. Sorry, I'm reading through some of your questions here. We call a bull flag fire. Yeah. We had a lot of congressionals in it. Yeah, also true. Is it Bitfarms? Not it. What's Bitfarms? I thought it was BITF. Like it even trades anymore. I don't know where that one is. SEI, somebody said Solaris Energy. Yeah, Solaris, I mean, really good uptrend. It's not quite as strong of a trend as some of the others. Let me show you another one I found. So this is ALKS, a biotech stock. This one put in a really good it's obviously extended now. Like, might it go to 60 or 70? Sure. It might also pull back to 45 or 50. So that's why I like buying it coming out of these things. But you can see that same kind of pattern here. Notice how it breaks out, makes a quick run, gives you a retest. So a second possible entry on a retest here, and then just launches off that $37 price point. Now, one of the biggest ways to find stocks, somebody said, Outlook. So Outlook, yes, looks great. Now, if you're a longtime follower of my YouTube channel, you know we recommended this stock over here at like 78 cents. This is not a shallowing breakout pattern. This is something known as a high tight flag. So here's how a high tight flag works. And it's the same concept, right? It's the same idea. We want a stock that's going up. We want to wait until some of that supply is sucked out. The sellers are out of the way, right? And again, just think about it in terms of supply and demand. Like if a stock is going and going and going and going, the reason they keep going is news keeps getting better. The price target keeps getting updated. The earnings projection keeps going higher. So people keep thinking it's worth more and more and more and more, right? A high tight flag is usually something came big news, big news. So let me put this thing in. Well, let's just look at it in terms of percentages here. So this thing went up 332% in 1, 2, 3, 4, 5, 6, 7, 8 trading days. It quadrupled in a week. Okay. That is massive. So this was not, hey, their earnings were 2% better. In fact, the news on OTLK, and this is a biotech, they're totally news driven, was that their drug trial, which the FDA had rejected, they appealed that rejection, and the FDA came back and said, okay, you're right. There actually is some proof. Let's give it a second look. So suddenly, everyone's wrong on the value because the drug might actually get to market. So it makes a big move. Now, I'm just going to go back in time here, okay? Now, when a stock does this, one of two things is going to happen. Either it's going to make a big move. People are going to say, great, I just quadrupled my money in a week. I'm selling, and drive it back down. Or it's going to keep going up. And so this high tight flag, and you can kind of, I've drawn it kind of like this. Some could sort of draw it like it's this little flagging pattern here on the chart, right? Says, okay, yes, it's pulling back a little, but not very much. Like, people are still buying it. This thing quadrupled in a week, and instead of just taking their profits, it's kind of holding up here, and it's like 15, 20% range. And so then when the stock breaks out, similar to as it breaks out of one of those shallowing patterns, it's game back on. Demand step back in. And from there, it just absolutely ripped higher. Okay. So this is a similar concept, different pattern, big run up, little flagging, buy when it breaks out from that little flag pattern. And as you can see, it's done great. I mean, it went up 100. What are we up? 117% in 16 days. Nothing wrong with that, right? So, what's your question? Is your question, should I keep holding it? I would be selling half to two-thirds of this thing now. It's not extremely frequent. You're going to double your money in 2.5 weeks. Might this thing go to 3 or 4? Absolutely. It might go to 10. It might also not win the FDA case and come all the way back to 60 cents. It's why they're so news driven. So I'm kind of a bird in the hands, better than two in the bush kind of guy. I like to nail down profits when I have them. And so if this were me, and again, I've sold out, in fact, I sold out of this thing way too early because I get up 30, 40, 50, 60%. It's really hard for me not to take those gains, at least some of them. Um, but yes, it's been a monster. But can you see the similarities? Same principles behind this, just a different pattern. MP Materials. Yeah, so this is all right. So the best buys, at least in my opinion, are when the technicals and the fundamentals line up. So you've got a good story. There's a real catalyst. They're solving some kind of bottleneck in a bigger picture, and the chart sets up. And these things aren't always going to line up, right? You can find a great house and the price is silly. You can find a great stock, but nobody wants it right now. And the Warren Buffetts of the world would say, well, based on my research, MP Materials should be worth 100 or 150. It's trading at 50. I'm going to buy it and I'll sit on it for 6 months, 6 years if I have to, because I know it's worth more. Okay. That's known as value investing. And if you're really good at the fundamentals, if you are confident in your ability to forecast the future and demand and where things are going to be several years in advance, that's not a bad way to go. I don't trade that way. I am purely a momentum investor. I'm a swing trader. I'm looking for stocks I can hold for 2 weeks to 2 months, get a nice little burst, move on and go to the next one. I plan to be all in cash if we go into a bear market, and I'll sit there as long as I need to. I'm just targeting these opportunities. So, MP Materials, I love the company. I love the story. I think it's great. What is the chart telling me? There's no demand for it right now. Now, there was huge demand for it over here. It was a hot story. It went from 18 to 100 in 6 months. Is the company worse today in June of 26 than it was in October last year? Is the company No, nothing has changed. So why is the company down 50%? Because the demand is no longer there, right? So when a stock is trending higher, when it's above its 20 and 50-day moving averages, when it runs and forms these periods where I can see consolidation coming in on the chart, getting ready to break out, when it does that, I'll buy it. And I'll run from 80 to 100, the 25% move in 48 hours. And when it rolls over, I'll sell and take a small win. This one didn't keep going, unfortunately. But, right now, it's just there's no demand for it. We're not seeing demand overwhelm supply. The stock could be going up. That's where things like Head and Shoulders patterns come from. So, where's the one I was looking at? No, let me see. Terra, very, very strong. Now, you see the breakout over here on the Terra. See how it spent 8, 9 months consolidating. And then once it emerged, it very quickly ran higher. That's the kind of thing I'm looking for. All right, we just talked about Moderna. What was the other one? Fuel cell at 25. Yeah. So what I'm looking to do, all right, fuel cell gapping. What I'm trying to do is when I look for these stocks, focus on the strongest areas of the market. All right. So markets tend to have themes to them. Between April and June, the theme was space. SpaceX is IPOing. It's the biggest IPO of all time. They're doing rockets and putting satellites into orbit to beam internet down to no. I mean, it's futuristic stuff. So what happened to all the space stocks? They all went up. Rocket Labs went up. All of them went up. What have they done since they went public? They got murdered because that's where the demand was. It was hyped. It was exciting, and people drove into those stocks in 2022 and 23 and 24, all about AI, all about the semiconductors. In the 1990s, it was dot coms. In the 1800s, it was railroads. In the 2010s, it was big tech. Like that's the big area the market are focusing on. So that's the theme of the market. And if we can figure out the theme, where the money is going, which areas are outperforming, where the big institutions are buying, that's where we want to fish, right? That's where we want to focus our efforts on the areas that are doing the best. Just like I wouldn't be actively pursuing stocks in a nasty bear market. Nothing's going up. But when I see biotech is leading on the 1 month, it's one of the top performers over 2 months. It's one of the top performers over 3 months and 6 months and 9 months and 12 months. That's an area that is leading the market. Semiconductors have been the big play the last 2 months. They're cooling now. But they just made these huge runs. And I told everybody in a video last week, said I think the semiconductor trade is over. I think it's rotation. And everyone's, oh, they're down one. I'm like, I'm telling you, do what you want. So when you can identify the leading, good night, fuel cells on a move. Let's see what this thing does the first couple of minutes. Look at that volume coming in there in 2 minutes. Wow. This is just not stopping. Now, I generally don't like to chase these. If you want to just buy 100 shares and see what happens, we can. I'm going to let it pull back a bit. Now, if I chased this and bought it, where's my stop loss? Where am I wrong? At a very minimum, the low of the day. If this is going to be a runner, it shouldn't go back to the low. Well, I'm not risking 12% on an opening range buy. That's crazy. Micron will be a strong buy for years. Yeah, we bought this on the breakout back here in April. Great trending stock. And so all right, so this is a good point. Like where do you buy this thing that's just ripping higher? So there's basically two places to buy a stock: breakouts and pullbacks. Or there's the third option, which is throw a dart and cross your fingers and pray to the stock gods, right? That's the three options. So breakouts look like this. It's coming in, it's shallowing. Oh, we went to war, comes right back, nice little tightening, breakout from consolidation. That's where the odds are best in your favor. Second place to buy is a pullback, meaning it's not at the highs. And some people hate buying at the highs. I get it. So where do you buy on pullback? Well, there's a couple of ways to do it. One is a previous area of support or resistance. So let's just draw a line kind of in here. See how Micron made that big run from 400 to 800 where it finally stalled. It then breaks out higher, pulls back. That's a previous area of resistance, which should become support, which would be a buy point there. Okay, that's one. The other is just to use a key moving average. And oftentimes you'll see these stocks be supported by one of a couple of moving averages. Generally either this, which is the 20-day moving average, or the 50-day moving average. Very fast moving stocks like this generally ride the 20, slower moving generally ride the 50. And so if it pulls back, like if it touched here, would have been a good buy. That would have been a perfect buy. That would have been a perfect buy, right? Along those moving averages. Give me some other stocks that are trending higher. We'll see if this is working. I don't want to cherry pick. You guys are getting wearing me out there with the comments, which is good. I appreciate it. Listen, fire away. Poke holes in this stuff. If I'm wrong, please call me out. Rocket Lab buying Iridium makes you happy. Okay, so it's up a little bit on that news, but this is a perfect example. So see how now again, it's not perfect, right? But we can still see signs of this multi-month consolidation. The dips are getting shallower. It breaks out on volume. Look at this candle. Biggest volume in a year. Breaks out through the highs. Okay, stocks in play went up 50% in 3 weeks. And then it rolled all the way back over because Rocket Lab didn't get 50% better in 3 weeks. It was just the momentum around SpaceX. All right, a lot of stocks. Let's see. PDYN. Yeah, this one is again, the story is great on it, but the demand's not there so far. I kind of thought it would be in here. We started getting a little bit of a move up into the sevens. It's rolled back over. And this is one that has an exclusive contract to sell Israeli drones to the US Army. And those deals change all the time. Like, that's the thing. Just like that deal with OTLK, that stock doubled. It might not have, though. If things fell apart, if the FDA came back quickly and said, nope, we're turning this down. They may not be getting a deal. And there's people who know far more than I do. Somebody said Intel. Yeah, Intel has been an absolute monster. Didn't really get much of a pullback opportunity anywhere here. Somebody said Keel Infrastructure. Okay, perfect. What is this stock riding? Where's the support for this stock? Very clearly, it's riding this 20-day moving average. So if you like this stock, you like the story, you like the infrastructure play, which I do, it's a buy here off that moving average. Risk 10, 15%, see if it runs. ASTS, somebody said, is flying. I mean, I guess on the day it is, but it's an absolute dog. Like it's down 50% in 30 days, just like it ran 100% the 30 days before. But do you see the difference? Like, what can you tell where the demand and supply is in the stock? Is there a clear trend? Is the price action tightening, showing that it's being consolidated? No, it's widening. It's ping-ponging all over the place. I have no idea what AST SpaceMobile is going to do. No idea. I know I don't have any edge. I know I don't see a breakout pattern. I don't see a good trending stock upward. I can buy on temporary weakness off a moving average. I just see a stock that's flipping all over the place. Robinhood. I think Robinhood looks good here. I like the story a lot. Again, we bought this one over in here. You can see the breakout off that pullback. Made a monstrous move. When it closed under the 50 over here, we got out. But the same pattern, we look forward to highs. That same consolidation pattern. You look for the exact same thing on the lows. Was Robinhood in an uptrend? No, it was getting absolutely murdered. Down 58% between October and March. Okay, well, it's going to keep falling as long as the supply exceeds the demand. Again, I don't care if Robinhood's headquarters is built on the world's largest gold deposit. I don't care if Goldman Sachs and JP Morgan and Warren Buffett's firm and the New York City Pension Fund, if all these guys decide they don't want it and they're selling it, it's going to go down, period. It might go to $3. I don't know. But until I see that there is demand, that they're accumulating, and the supply's been exhausted, I don't want it. So what do we see here on the bottom? Well, it's falling, it's falling, it's falling, and then we start to see some buying. And then the next pullback is shallower. And then the next pullback is shallower. That's that consolidation. Buyers finally started coming in, and there's sellers here, and there's fewer sellers there, and there's fewer sellers there. They're gobbling up that supply, just like they would at the highs. Same principles apply. And so there's your breakout here at about 95. It makes a pretty quick move of about 20%. It then pulls back because this market's an absolute ping pong ball and all over the place, giving us a retest buy right here. So I think you can buy Robinhood here. I like the company. I don't use their platform, but I know most people my age and younger do. I know they're getting into banking. They're offering credit cards. I think Robinhood will be the Charles Schwab and the Fidelity of the world. for my generation, which I'm 43. So I think, 10 years down, they're going to be that big. They're going to be the big investment bank, right? They got IPO shares. One of 5 firms got IPO shares with SpaceX. So I like the story. So if I bought it here, I'd probably risk, 10%. Because if this is in fact a shallowing bottom on this stock, if it has completed its phase one consolidation, is starting its run higher, it shouldn't really rip back down below here. In fact, where should it go? Well, we're just chasing the last area of supply. I think my first target would probably be up here around 120. We can go through there. I'm probably looking at this area around 150. And then it's off to new highs, right? I'm not saying it's going to stop there. I'm saying that's where I could see it stalling. Now, why would it stall here? If the stock started running, why would it stall at 120? Well, because there's supply there. All these people who bought in December and January have been sitting there underwater, looking at big, nasty red numbers in their accounts, going, dear God, if I get the chance to get a break even, I'm doing it. And so when it comes back, there's a chance that's exactly what they do. This is a clean breakout in ALKS. Again, multi-month. You can see the move there. I'm not trying to Monday morning quarterback for everybody to go, great, he's showing us. I'm just trying to teach you the method. I want to burn this into your head and show you enough examples that look different enough that when you see one live, you'll take it. Let's see what we can buy today. Natera. Okay. Now, not a huge one, but a bit of a kind of high tight flag here. I admit I'm kind of pressing this. But you see the big move. It spent 1, 2, 3, 3 days consolidating here. If it breaks out above the highs, you could buy it. With a stop loss here, risk 5% on a stock with an 89 out of 100 relative strength rating. It is a biotech, so it's in the number one performing group in the market, in a bull market, showing a lot of strength with improving volume on the run up, right? So that to me would be a high probability trade. I'm just stacking the things in my favor. I want a bull market. We have a bull market, right? We're kind of, we've been stalling here the last couple weeks, but I mean, it's really tough to look at that and say we're not in a bull market when we're within 2 or 3% from all-time highs. Okay, good. Where do we want to focus? The strongest areas. Biotechs are strong. Semis are pretty strong. Quantum showing a little bit of strength. Airlines are coming up the ranks. Great. Now I want to look for these patterns. I want to look for some sign that says they've sucked up the stock. It's a lower risk opportunity to buy. Here and get in some. NOW. Yeah, so ServiceNow, this is a great example. I did a video on this stock because the story made sense, right? I didn't come in here and say it's a perfect chart pattern. I didn't say it's a perfect breakout. I said the story makes a lot of sense. You've got the CEO of NVIDIA out there championing this as the services company. He's got a fantastic track record for calling this stuff, given the fact that he knows more about the industry pretty much anybody else in the world. It was over here at about $9,500 a share. We bought it. And look, it went up 40% in 12 days. Now, let's look at the company. This is a $105 billion company. It trades $3 billion a day worth of stock. That's not easy. To move a $100 billion company up 40% in 2 weeks. That's probably too far, too fast. So I'm not going to let a 40% week and a half gain go away. Plus, I had a big gap higher, another big gap higher. These are blow-off top exhaustion signals. I put my stop down in here and was out at 130 a share. It's back down to 100. Maybe it's a good time to buy here. But and I don't want to sound like I'm talking out of both sides of my mouth because you got to separate good stock from good price or short-term trade from long-term, right? If I had to park money in something that I can't touch for 5 or 10 years, this is probably one of the places I'd put it. If I got to park money in something I think is going to go higher for the next 7 days, this may not be my highest probability play, right? Just like if you're at the grocery store and you're picking up food for your family for the next week. You can buy eggs, you can buy milk, you can buy all that stuff. If I sent you to the grocery store and said, get food to fill a bunker, that's got to last for 5 years, you're not buying those eggs. You're not buying that milk. You're getting canned goods and stuff you can freeze, right? So, same idea, just different time frames. ADR is 5.5%. What is a good ADR for most stocks? So, I wouldn't say there's a good and a bad ADR, but it depends on your time frame. Like if you're swing trading like I am, if you're looking for stocks to hold for a couple of weeks, maybe a couple of months, I want higher, like ideally 5% or higher. That means the stock moves, and what he's talking about is this up here, this average daily range. From low to high, it moves 5.5% a day on average. So, I mean, a good day, it maybe moves 7 or 8, a bad day, maybe 3 or 4. So, I'm going to kind of look at that and go, all right, well, a good day, it goes up 5%. So, that means I get 3, 4 good days in a row at 15, 20, 25% move. I could make something, right? Compare that to a Walmart that moves 2% a day. Well, if I got a 3-week streak on Walmart, maybe I'll make 15%, right? So you just have to kind of adjust your expectations based on that. AST Space Mobile, 10% a day. So am I going to be able to buy this and risk 3 or 4%? No, I'm not. You stopped out before I even get the order entered. LAES. So this stock I like a lot. I love the story a lot. The chart looks a little bit early. I kind of thought we were going to come out over in here. Again, big kind of downtrend in here. Coming in, shallowing up nicely. Big rip, starts to move, and then just kind of goes back into stagnation. So it doesn't look bad. It just looks early. We're still consolidating. We're still kind of chopping in this $3 to $3.50 range. But what I'd like to see in LAES, and if I kind of draw a line across here, you'll see the significance, this sort of, $3.70, $4 area. Yeah, don't expect it to be perfect. But, yeah, I mean, look at the move over here, okay, from 2 to 9. Comes all the way back down and stops at 3.5. Goes to 5, stops at 3.5. Stops at 3, right? That's the support for the stock. So then over here, it crushes through, and then it becomes resistance, and resistance, and resistance, right? So what I'd like to see in LAS, which I hope I see, is a little bit more come through, absorb a supply, and then come through to the upside. That's what I'm expecting to play out. Do I think it's going to happen in the next 10 minutes? Well, no, I don't see anything that says that. But it has, you see, I mean, it's forming that bottom, right? You see the lows are getting higher. The highs are getting higher. That's what we want to see. Hope that makes sense. Is it ever a good idea to look at the top losers? If you're looking for turnarounds, yeah, absolutely. I mean, take a stock like Nike. What a piece of crap this thing is, right? No idea nobody bought tennis shoes anymore. I got big, fat, like caveman feet. They don't fit very well. My wife loves them, but from 180 to $40 a share, like there's nothing that could make me buy this stock today. But once it forms that low, right? Once it gets so cheap that investors go, man, this is a deal. We got to start buying this thing. It's trading at a super low earnings multiple or sales multiple or whatever. And I thought we might do it over in here, but it fell back apart, right? But if we start seeing this and then like that, if these pullbacks start declining and shallowing, if there are signs that it's being accumulated and built up, then when this thing breaks out, I'd absolutely buy it. And heck, this used to be $180 a share. If it just goes to half that, you're going to double your money. Big insider trading on Nike. I'm not surprised by that. Insiders are really good at timing lows on their stocks. So I said there's nothing that made me buy this today. That's not true. If I was looking for stuff to hold for 3, 5, 10 years, this would absolutely be a good candidate I'd probably look at. I mean, some of these big tech stocks have been hammered. Amazon's not quite as cheap as it was. I really should have been buying it over in here on that pullback at 200 in my long-term accounts. Apple would just come down a bit because they had to raise the prices on all their units because of the increasing software and chip costs. Probably not quite cheap enough yet. These stocks, the big leaders on their 200-day moving average tends to be one of the best places to buy. All right, let me look at some of you guys' stocks. Now, by the way, again, that $5 Black Ops special still going on. Do not forget to sign up today before you leave this. So just go to tradewithross.com. There's a link in the description. We even made you a cute little QR code over there in the corner. So if you're watching this from bed or something, just pull out your phone, zoom in on that, click it, get signed up. It's just $5, and I'll help you out for the entire year. Okay. All right. Look at some stocks here. See what you guys are seeing. Man, what a monster that's been. Oh, Jack in the Box. Now I'm releasing a video on this tomorrow or today, I think. Um, this is potentially a new meme stock. Now, if you heard about the Wendy's situation, you know the Wall Street Bets forum on Reddit, the one that drove GameStop from 17 to 480 back in 2021. They started championing Wendy's down here. It made like this 50% move, got eviscerated for reasons I explained in that video. But this is like a really simple company, Jack in the Box. Okay, let me turn off this positions just so you can see it clearer. Now, not trending higher anywhere even close. This thing's been getting taken out of the woodshed, down 90% in the last couple of years. Okay, but notice what we're seeing here off the lows. It may or may not work. I'm kind of getting in this thing a little bit early. I'm kind of building a position around that $14 mark. But do you see how it is kind of coming in and tightening up right against that $14 area? So this is not a leading category stock. It's kind of an offshoot, but I'm looking for a breakout above 14. So I've got an order to buy at 14. I bought some here at 13 and a half or 13 quarter, something like that. But if this thing starts running, where would be my first target for Jack in the Box on a move higher? Who can tell me? Jawbreaker, thank you for OTLK. You're welcome, man. Hopefully you made some money. Good job. Who can tell me a target for JACK? I'm up 48% on Outlook. Should I take my winnings and get back in right before the decision? That's the thing. We don't have a hard date on this. Well, actually, we do have a hard date, I guess, but it could come early. Somebody said 18. I can see why you say 18. 27.5, around 20. Yeah, I'd kind of put my target up in here at around $22. So yes, there was a little bit of supply here for 3 or 4 days, but like this is a month or two up in here, right? So not saying it's going to go there and stop and flip right back down, but that's a likely place the stock could go to and kind of stall. So anyway, just thought I'd share that with you. We got a video going out today on it. I shot it on Friday. The editor's been messing with it over the weekend. Hopefully it's coming up here soon. But I try to be pretty transparent with my stuff. Again, I'm long from here, like 1320, 1330. You can see I got another 500 buy stop order at 14. So if we break through 14, I'll add some more on here. And I've only got 1,000 shares. It's not a huge position, but if I start to see it coming out on good volume, I'm going to be adding in pretty quickly. All right. I'm going to try to do your stock, but y'all fire these things in quick. Sometimes I miss them. Uber. Yeah, getting strength near term. I just don't, it looks early to me. May go up, may go down, don't know, but do I see a really clean buy opportunity? No. Like if this had kind of stayed up here and tightened, right? But the fact that it's still making these dips shows me there's still some supply there. So I'm not as bullish on that one. COPX. Yeah, I like it. Also, just early, these copper miners ETFs moving a multiple of copper. When we look at copper prices, I just had to close mine out because I gotta roll this thing. I had the July contract. Looking strong. It's just very, very sensitive to this Middle East stuff. So had a nice move in here, came up, tightened, little breakout. Notice it was holding at resistance. So it's just kind of choppy here. NNBR, big gapper, huge volume. Don't know the news. Metal Fab, 200 million. So we got a micro cap stock trading at 100 times their average volume. I don't know what the news is, but looks like it's been priced in. STM, yeah. I mean, STM, nice clean trend. A lot of these semi stocks are a bit extended. In fact, a lot extended. And when I say extended, I just mean, okay, they were consolidating over in here. Huge, huge move. We need to digest that. And I think we're early on these. I think if they're going to keep going, we need a month or so to absorb all that supply. All the people who doubled and tripled, we got to get through that. So I'd be a little scared to buy these prematurely unless there's some other catalyst behind it. KLAR, love it. Yes, looks good. Perfect, perfect consolidation off the lows. Exactly what we were just looking at. So kind of draw a line. Again, don't expect it to be perfect to the penny, but look at this. See how it comes in, starts to tighten, consolidates, comes in, little move, retest, back to new highs. Exactly what you want to see. Looks great. Great pick. Now, I'm not going to claim it. I know exactly where it's going, but if it really started to run, my first target will be right up here at about $30 a share. Makes sense? That's what a supply is. It could just blow through. I'm not saying it won't, but usually if it does something like this, expect to see, that in there at a minimum, and maybe it keeps going. Now, what do I know about the fundamentals of Klarna? Not a damn thing. If the fundamentals are garbage, hold this lightly. They are garbage. No earnings. Sales are coming up. They're doing okay. But it's just based on supply and demand. Boat, the shipping sector, still like it. Cannot believe it's coming down. I think this is short-sightedness from a lot of investors. They think these ton rates are going to go down because we made peace with Iran. I don't think that's true long term. So I do think this is a great place to be buying this on a long-term trade. But yeah, the price action absolutely falling apart here the last couple of days. I look like a total idiot. I dropped a video last week on these stocks. FRO, Frontline, which I like, is pulled way, way, way back. I mean, look at how clean this was. Big strength, nice shallowing, looking great, starts to run, and just a visceral. I think it is a gut reaction to peace with Iran, potentially. These ton rates, I just don't think they are long term. So, again, this is one where my analysis, the fundamentals, don't perfectly align with the chart. So, would I get extra heavy in this one? No. It looked great, and then it just soured. This can happen. That's why the stop loss are so important. That's why we're only risking 7, 8, 10% on these. High conviction held loosely, as they like to say. Bloom Energy. So prematurely ran, comes down. Yeah, it's just back in this meat. I don't think you have a huge edge here. Now, on a swing trade, it's probably a pretty good place to buy. Like this 50-day moving average, it got a little under it here, is generally what should support a stage 2 uptrend stock. So maybe the run's over, you're the last guy to the party, but if not, it's probably a pretty good place to buy. I think you could pick it up here, risk 15%, and if it takes out your stop, you don't want to own it anyway. It's lookout below. But yeah, I mean, look, this thing was 350 2 days ago. Now it's 270. I'm not sure what the news is on this one. Was it an earnings miss or something? Nope, wasn't earnings related. Okay. Watch Micron today. All right. DAX up 14. Added 500 shares on that one. Yeah, I mean, look, it's been holding this 20-day. So if you buy it, again, just say, look, I'm going to buy it and see if this trend holds. If it does, it shouldn't go below 980. Am I willing to risk 8% on a stock that goes up or, moves 7.5% a day on average in an uptrend in a leading group in a bull market? Yeah, sure. It's worth a stab. It's a good pullback buy. Who pull buy. And pullbacks are tough because you got to buy in the face of selling. It's not an easy skill. PODD. Yeah, I mean, I see what you're seeing here. Kind of seeing this is capped. It just made 52-week lows 6 days ago. So I would like to see a little more consolidation from this to form a true bottom. I think the story on this stock is good. It might be early. Doesn't look like much in hindsight, but that's a 16% move in 4 days. So I would let it rest a little bit personally, but doesn't look bad. Aurora Innovation. What do they do? Package software, 12 billion. Automobile hardware, software, data services, the Aurora driver, which allows self-driving stuff. Okay. This is one of a small handful of stocks that seems to be coming back from the software sell-off thanks to agentic AI. I mean, yeah, it doesn't look bad. You know, it's pulled back to the 50. That's this line right here. It's starting to try and consolidate a little bit. I'd love to see it get up here and get legs, but yeah, not a bad pullback buy. UAMY. Again, love the company, love the story. Stock chart reads lower. So long term, probably a good buy. Now, this one is very, very early in terms of the fundamentals. So there's almost no sales. 6, 10, $13 million a quarter. It's $1 billion company, right? This would be like somebody with a $20,000 salary valuing their future at $5 billion. Like it's, you got to believe the story. So the thing with these story stocks that don't have the numbers to prove it yet is you're just throwing darts at a table of what it's worth. So I will absolutely trade these on a breakout higher on good momentum. But if the stock, again, all I have to work with is supply and demand. So what is that story telling me? Well, it's telling me it's down 46% in 2 months. Clearly, there's still plenty of supply there. So I don't see an edge to buying this one right now. I'm a little surprised it didn't break out and run over here. That's, to me, kind of a failed breakout because it came in, it's consolidating pretty nicely, nice little handle. I would have thought it ran there. So I would have been wrong. I'd have lost 15, 20% on that one. I wouldn't be losing 50% because I'm not a moron. I'm not going to lose 50% on anything ever. I never have, never will. I mean, I just don't believe in big losses. Oklo, same story. I like the nuclear space. I hate Sam Altman with a bloody passion. I think he is the Lex Luthor of our generation. I don't trust one word coming out of that man's mouth. And he I think, doesn't he run Oklo? What's the deal? He found it? This is a small nuclear company. Okay, he stepped down as chairman in April of last year, remains a significant investor, backer. Yeah, I just hate that little wiry guy. Really hate him. Sorry, getting personal. Alloy. Yeah, so Alloy, again, great story here. When did we get in this thing? Around $10. And so, was it a perfect pattern? No, but this is a company that I don't want to get the whole story. Basically, with some DoD contract, not DoD contract, but government contracts from the rare earths. They were uniquely positioned to profit from that. We got a little bit of consolidation in here. Made a big move, and look, it doubled in 3 weeks. Okay, I'm out. As soon as it breaks this uptrend, I'm gone. So I no longer own ALOY. And I hope I don't mislead anybody in these videos. I'll tell you up front. If I recommend a stock, if it falls 8 or 10%, I'm out. I was wrong. The timing's off. If I get up 30, 40, 50, 100%, I'm selling some, if not all. And as soon as I see signs of weakness, I'm out of the rest of it. Like, I'm not a long-term investor. I am not looking for stocks to hold for 3 to 5 years. I don't have the temperament. I don't have the patience. I don't have the conviction. Right or wrong, I just know that about myself. And so I am nailing down profits when I get them. So if I put a video out in April talking about a stock and it runs 50%, and here we are 3 months later and it's back down, just know I don't own it anymore. Okay? So I just want to be clear about that. AUPH. Yeah, this one. Also, I mean, I'm very surprised by this. Great pattern, good story, lots of strength, comes in, shallows out, breaks out beautifully to 19 and comes back to 16 and a half. Now, this is the thing with these biotechs. They're totally news driven. Totally news driven. Like they make what, a dollar or two, and well, it's not actually that expensive. This is probably a pretty good buy here, actually, because it's kind of a retest of that breakout area. But I really didn't think it'd come back down from 19 to 16. But the stock looks great. Am I going to address PAA and metals? Yeah, let's take a look. So, Plains America, again, still like this one. The chart's not perfect. I think it's a great. I featured this stock as a potential acquisition target of Chevron. I fully believe they're going to take their record profits in the next 2 quarters and buy this stock, acquire it. When they do so, it's probably going to pop overnight. It was not a short-term kind of trade. I think it's going to play out. In terms of the metals, yeah. So look, the metals run has absolutely soured. Gold was ripping higher. It's pulling back. Now, I think this is a great place to buy gold long term. I think the foreign central banks continue to buy. I think inflation is going to absolutely get worse. We're spending $2.5 trillion more than we bring in every year in a strong economy. Okay? All that money's printed. There's nothing that can happen other than inflation. All these government numbers we hear, it's 3.2 or 3.4. BS. Total garbage. Anyone alive walking around knows inflation's higher than that, and it will keep going up. So, does it look strong over the next couple of weeks? No, it does not. But I do think the fundamentals are strong. But again, the best trades happen when the chart lines up with the story. Okay? Let's go back here, and I've shown this before. The big breakout on gold really started where? Pretty flat all through here. Really started here, right? Early 24. That's when the big move happened. Okay, watch this. All right? Watch this. And I want to prove to you the power of reading charts. So, if we look in a daily chart, let me take the moving averages off. If we look at a daily chart, you can see that shallowing pattern I talked about. Maybe it wasn't perfect, but big move up, kind of coming in, shallowing up here, tightening, breaking through, right? Pretty obvious. Now, let's step back to a weekly chart. Let's look back here. What do you see over this 5-year period? Well, very similar action, just on a different time period. Huge run up in 19 and 20. Big shallowing, still deepening, and then it comes in and it shallows and it tightens, breaking out again here around 2100. Now step all the way out to a monthly chart. Let's really get big picture. What do you see here? Big run up in the 2000s. Massive 15-year consolidation pattern. Coming in, breaking out around 2200. So what we have is a short-term breakout, a medium-term breakout, a very long-term breakout, all here at 2200. What was the story on gold? Central banks are buying like crazy. Inflation is just coming off an 8.5% print. Government's printing money like drunken sailors. Everyone doesn't trust the U.S. dollar. Foreign governments are de-dollarizing their holdings, getting out of bonds. Everything said gold's going higher. The charts, both short, medium, and long term, lined up with the fundamental story, and that's how you get a parabolic move in gold. And if you think I'm Monday morning quarterbacking, like I'm not, I told everybody to do this. Okay, here's my newsletter. It's included with your $5 Black Ops from, look at the date, April 24th, 2024, the start of a gold super cycle. This was the breakout I showed, 2,100 an ounce. It's time to buy gold. Okay, that was right here. And anybody who listened made the biggest move in gold in the last 20 years. So when it all lines up, that's when the money's made. That's when you put your foot on the gas. Is the story still real? Absolutely. What's the chart look like? Garbage. It looks like garbage. It's probably good to buy gold here long term. I think it's going to be worth $15,000, $20,000, $30,000 an ounce in a decade, without question. But would I buy it here guessing it's going to go up in the next 2 weeks? Probably not. I would love to see It bottomed, consolidate, show me some signs that it's getting ready to run higher. And look at the patterns in here. It's the exact same as gold. It's better in gold because it runs purely on supply and demand. There's no earnings. There's no missed drug trials. It just trades on supply and demand. Breakout, run higher. Consolidation, breakout. Consolidation, breakout. Consolidation, breakout. And then it started to consolidate and it failed. And it's over. Right? So, I don't want to pretend I know everything. I'm not trying to, I can't predict what every stock's going to do. All I can do is say, hey, how do I get the odds in my favor? How do I give myself the best possible opportunity to make a decent sized gain very quickly? And the way to do that is wait for a bull market. Follow the leading groups where the money is flowing, where the hedge funds and the endowments and the pensions are buying. Stick to the leading stocks in that group that have high relative strength, that are ripping up the charts, where there's demand exceeding supply. And then buy at these points where the supply has been exhausted and I've got an actual advantage in terms of supply and demand. I have a place where there's limited supply and huge demand. That's it. That's all we're doing. Just trying to stack the odds in our favor. So we mentioned Broadcom. Yeah, just too choppy, right? I don't know what this news was that came out, and it was an earnings miss. Yeah, I mean, that's a big 20% drop. And a good way to judge these, if you're seeing a stock that drops, I had a guy once tell me he likes to buy tennis balls and sell eggs. Here's what that means. It's all about supply and demand. When you drop a tennis ball and it hits the concrete, what happens? It bounces, right? If you drop an egg, what happens? It splats. This is an egg. And just think about what this chart is telling you. No need to look at indicators. What is the chart telling us? It's telling us this thing that was $500 a share fell to $350. It got marked. What is the dip? This thing just went on sale, 25% off. Nobody bought it. Nobody took advantage of this discount. A couple of people did, but they're still selling and it's going lower. So the demand is not there. Your house is on the market for $700,000. Nobody's bidding. You drop it to 600, still nobody bids. What are you going to do? Raise the price or lower it? You have to keep lowering until the demand comes in. That's how you figure out what something's worth. Now, if a news article comes out that Broadcom just got some massive government contract worth $80 billion over a decade, it's going to surge. If a new CEO comes in and turns things around, there's news that can change it, right? But based on what the market knows now, there's no demand for Broadcom, even at a 25% off sale. DFTX, monster. Pharmaceutical, $5 billion, 50% up day, and it kept running. That's everything you need to know right there. 50% in a day. Nobody sold it. Nobody dumped it. Let's look at the gap. Chopped around, held, and started running again. Yeah, looks great. Massive strength. Look at the volume. Huge volume in here. I agree. Some need to cool off, like 100%. SOXS. Daily semiconductor. Oh, a triple short semiconductor. If you got the stomach for it, this is probably a good trade. I mean, if you've got the stomach to buy a triple short ETF on what has been the leading sector for the last 3 months, I do think they're extended. I do think they're going to cool off, and even a little bit of cooling is going to push this thing up 50 to 100%. But you got to have the stomach for it. VRT, Vertiv Holdings, looks okay. I mean, the trend is great. This to me is kind of your failure point. If it takes out 275. See how that was resistance over in here? Breaks through, now it's support. Really should bounce. You want to see lower highs, I'm sorry, higher lows, higher highs. So if you bought the dip here, yeah, you can risk 7 or 8%. I think it's probably a good trade. It's a decent mover, right? A good week could add 15, 20% to this thing. Sure. Fortinet looks beautiful. Beautiful. You see that wedging, see that shallowing pattern up in here? See how price action compressed instead of widened? The pullback's got less and less and less. It's exploding out on volume. Exactly what you want to see. Looks perfect. Perfect. Love it. Love Fortinet. Hive Digital, yeah, not really. I mean, maybe it works, but again, stocks in demand don't normally fall 35% in 3 days. So it wouldn't be one I'd want to trust in here. I don't know what this thing is, but it's absolutely soaring. 14%, 17%, 12%. Wow. Now be careful. You got an exhaustion gap here. So when you get these big moves and then it gaps higher, especially if it gaps higher again tomorrow, I'd be taking some profits up in here. I don't know where you own it from, but it's one of the signs that a stock is getting exhausted. Intel, I think we looked at Intel. Yeah, I mean, it looks okay. It's just extended. Um, Thought it should kind of break out from here, but it's pulling back. So that's a kind of strike against it. This is known as a pivot point, where that's your pivot where it should go. It's failing it. Now you're back into the base, which is this area. A base failure, meaning breakthrough here, would be game over for me. Um, I'm it could absolutely keep running. I'm generally not in the business of buying stuff that just rips. So I like that it's consolidating, but it's kind of 50-50 for me up here. Um, Beam Therapeutics. Yeah, I don't really have a great read on this. I mean, you kind of blur your eyes and step back to a weekly chart. It's like, okay, well, yeah, you know, it's come in, it's kind of consolidating. It looks like it wants to get out and go. Sure. Is it perfect shorter term? It's kind of stalling in here. I just don't have a really, really good read on this. Fundamentals first ETF. Boy, this thing's thin. 6 million in assets under management. Goodness, it's tiny. This is kind of value investing ETF. 100 companies, equity and fixed income, long only, long term approach, fundamental investment research. Okay, so some value investor spent some money and started an ETF. Okay, I mean, look, trends up. Yeah, looks good. It's just very thin. You'd have to know about. Oh yeah, insurance. Come on. Is Marvell looking good? No, it's not. I mean, it's doing what anything does. It's up 300% in a couple of months, right? It's pulling back. I mean, this has been the run to memory stocks has been historic, and it all had to do with agentic AI. Everything was all about the GPUs, stuff NVIDIA made to make AI possible. Then agentic AI comes out, where you can say, hey, do all this research, scan these, build me a spreadsheet, alert me when this happens, blah, 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 blah. And it required tons and tons of RAM, of memory. And so these stocks just surged. Prices went nuts. But, you're talking about a $200 billion company that just quadrupled. So maybe it keeps running. If you want to take a stab at it, this is probably the place to do it. But it just looks extended. Right or wrong, I want to wait until I see this get absorbed. I need to know we're through all the supply. And to me, I just don't see that yet. Not saying it's going to fall apart. I'm just saying I would not buy here personally. UEC. Yeah, again, love the uranium story, but the chart says we're not ready. OUST and robotics. Yeah, wow, monster. Looks great. It's a mover, right? I mean, 13% per day on average. But I mean, the thing's going from 17 to 50 in a couple of months. So it's It's a monster. You just gotta, you know, brace yourself for the moves. KRMN, I wouldn't buy it. I don't know anything about with aerospace and defense. I mean, nobody seems to want it. So it doesn't look, it's not really going in the right direction. Boeing, yeah, I mean, just choppy. Don't really see much in here. Nebius. So it's funny you said Nebius. ATA Conundrum. I don't know how you spell your name. I was looking at this. Really interesting company in BIS. And I was watching reading some posts on it. This is what I was looking at. This guy, Melvin Invests on X. I think it's going to be $1 trillion company. I had another one. Where'd the other one go? Here we go. One of only 4 companies on Earth that can deliver hundreds of thousands of GPUs in a publicly available cloud, headed to $1 trillion market cap. I haven't done all the research on it yet, but I this is on my radar. I like the stock. I mean, look what we got here. Massive ADR. Almost 11% a day, low to high. Its relative strength rating, 98 out of 100. It has tripled since April, and it hasn't even touched this 50-day moving average yet. If we put it in log scale, which I think you need to on stocks that have moved this much, you've got this kind of trend channel ripping up the side here. And so you're kind of buying on a lower side. It's a mover, right? But it's in the right place. The trend is strong. I do like Nebius. I plan to do a little more research on this. There's just not enough hours in the day to chase down every opportunity I want or I want to look at. But yeah, I second you on Nebius here. I think it looks really strong. And I like the action we're seeing. And if the story checks out, this could be kind of the next NVIDIA, right? Now, let me tell you a stock I would never buy, and that's this one, Strategy. If you're not familiar, this is Michael Saylor. Is that his name? Michael Saylor's Bitcoin holding company. Now, for the Bitcoin guys out there, I know you're not going to like what I have to say, but here's the thing. This is a Ponzi scheme, okay? What MicroStrategy does is just hold Bitcoin. It then delivers a yield, what he calls a Bitcoin yield. And here's how his Bitcoin yield works. He says, okay, I'm just going to use simple numbers. We have 100 Bitcoin in the vault. Those Bitcoin are worth $10 each. So we should be worth $1,000, right? Makes sense. If the market capitalization of MicroStrategy is $900, so it's trading at a discount, what he will do is issue $100 worth of stock, create new stock, dilute the shareholders, use it to buy 10 more Bitcoin, and he considers that a yield, right? So he's playing the discount game. And that works as long as the stock trades, reverse. It's not a premium to the Bitcoin. So it should be worth $1,000. The company's worth $1,100. He issues more stock to add $100 in Bitcoin, dilute shareholders, do it that way. The problem is it doesn't work when Bitcoin's going down. And right now, this stock trades at a discount to the Bitcoin it holds. So if you took all its Bitcoin divided by the number of shares, it'd probably come out to 100 or 120, trade at 85. So at this point, to pay this yield, these dividends he's promised with a company that produces no profit whatsoever, he has to sell the Bitcoin, dilute his shareholders at a discount. So he has to sell when his stock is trading at a value below his Bitcoin. So he takes a loss on a Bitcoin, an additional loss in a valuation, and this thing just snowballs. And this guy is the charlatan of all charlatans. He has convinced people that Bitcoin will go straight up forever. And as long as it does, it's a sound strategy. But a vehicle that promises a dividend when it has no cash coming in and is forced to sell assets to pay it, that means using investor capital to pay the dividend, is the definition of a Ponzi scheme. And Saylor, if you're hearing this, I say the same thing to your face. I respect the bullishness and the optimism. If Bitcoin goes to 1 million, you look like a genius. But when this happens, you look like a fraudster and a destroyer of wealth. And that's what's happening here. And there is nothing that guarantees Bitcoin goes higher. So I wouldn't touch this with a 10-foot pole. And anyone who did has suffered catastrophically, 80%. All right, guys, tell you what, let's go ahead and end here. I know we are way over time. If you haven't already, make sure you go to tradewithross.com to get signed up for that Black Ops membership. It is $5 for the entire year. The page is corny. I didn't make it. I apologize for the cliches, but the value is there. It's $5 for the whole year. You'll get my weekly newsletter to your inbox every Friday night. This session with me every Monday, another session every Thursday with one of my analysts. You'll get access to our indicators, several bonus reports, my support team, tons of stuff. It is $5 for the year, no strings. Get signed up, and I'll see you all next week. All right. Thanks, everybody.